please find and read Managerial Accounting Example 3B. Here we're going to look at the allocation of overhead cost to individual products and to production as a whole, and we're going to take that all the way through under and over applied overhead and cost of goods sold. So this company makes several products. They estimate their total manufacturing overhead for the year to be $1.5 million. Overhead will be allocated to products on the basis of machine hours, and they estimate a total of 75,000 machine hours for the year. So the first thing we're asked to do is calculate the company's predetermined manufacturing overhead allocation rate. So to calculate that, we take the estimated total manufacturing overhead of $1.5 million. And we're going to divide that by the total of the allocation base, the estimated total allocation base, which in this case is given at 75,000 machine hours. And so our predetermined manufacturing overhead allocation rate is going to be $1.5 million divided by 75,000 machine hours, or $20 per machine hour. So that is requirement 1. Requirement 2, we're going to use this allocation rate to allocate overhead. Requirement 2, one of the company's products, number PDX9, uses 18 machine hours per unit. Calculate the amount of overhead applied to one unit, a unit of the PDX9. So in this case, we're going to use the predetermined manufacturing overhead allocation rate of $20 per machine hour, and we're going to multiply it by the machine hours used per unit of the PDX9, and that's given at 18. And so we're simply going to multiply the two and say that the overhead allocated to a unit of PDX9 is $360. That's to a single unit. We look at requirement 3, we're going to take all the units of a product. So requirement 3, we're going to take the same approach of using our predetermined manufacturing overhead allocation rate of $20 per machine hour, except in this time it's going to be the machine hours used for all units. And the general approach here is we can use our $20 per machine hour allocation rate to allocate overhead to any cost object at all. All we need is to understand the amount of machine hours used by that particular cost object. So here, if our cost object is all the production of PDX40 and that used 1,850 hours, we would simply multiply the 1,850 machine hours by the $20 per machine hour, and the total overhead allocated to all production of PDX40 is $37,000. So that is requirement 3. Requirement 4, looks not at individual products, but all of the overhead for the year. So we have to allocate overhead to all production. It says at the end of the year, it was determined that the company had spent $1.582 million on actual overhead costs. It was also determined that the company's machines had worked 76,500 hours to make all units of its products. Calculate the over or under applied overhead for the year. So there are really 2 steps here. The first thing that we have to do is use our predetermined manufacturing overhead allocation rate of $20 per machine hour. And then we're going to multiply that by the machine hours used for production. In this case, it's for production of all units of all products. and we're told here that that's 76,500 machine hours. And so the overhead allocated to all production for the entire year is simply going to be $20 times 76,500 machine hours, or $1.53 million. So that's the total amount allocated to production. But that's not the same amount that we actually spent. So during the year we spent a different amount of overhead, which in this case we're told is $1,582,000. And what we need to compare is the amount of overhead that's been allocated to production and entered into our work in process accounts against the amount of overhead that we've spent during the year. And it turns out that we've allocated less overhead cost than we have actually spent. So in other words, what we've done is we've put only $1,530,000 into our work in process account, but we've actually spent $1,582,000 on overhead. So the amount that's been put into our work in process account is too small by $52,000, and we call that under-applied overhead. So what we need to do ultimately is increase the amount of overhead cost that's applied to production, because we haven't put enough in there. So that is our under-applied overhead. Notice what we haven't done. Neither the $1,530,000 nor the $1,582,000, neither of those is our original estimate of $1.5 million. At the end of the year, or the end of the accounting period, we no longer care about our original estimate. The original estimate is really only used to come up with our predetermined overhead allocation rate, and then we don't use it anymore. Our under or over-applied overhead is a comparison of the overhead allocated to production and the actual overhead spent. We don't care about the $1.5 million of the original estimate anymore.